So huge for me and my portfolio. And you talked me off the ledge actually this week on something that I've
Yeah.
had a lot of conviction on and
Right.
was really doubting. And so it
Mhm.
is super, super helpful getting that outside perspective.
There's going to be times where you're going to have things that you just really need to get off your chest. And like it or not, investing is part emotion and is part numbers, and we have to master both. And all right, folks, welcome to Investing for Beginners podcast. Today, we're going to do a different turn. Today, we're going to talk about stock therapy, and I am going to be sitting in the patient seat, and Andrew is going to be the therapist. I have some questions about my portfolio and some companies that I'm potentially interested in, and they kind of all fit together, and I thought maybe this would be an interesting conversation to talk about how I think, or we think, about investing, portfolio management, and just exposing ourselves to potential ridicule. So here we go.
Well, have a seat, Mr. Ahern. What brings you in today?
Well, doctor, I'm actually having some challenges. One of the things that I'm struggling with, and they're all kind of correlated, but one of the things that I am struggling with is I have around 25, 26 companies in my portfolio, and I feel like I'm starting to bump up against how many I actually want to own, not only from a maintenance standpoint, but also from I worry about getting, I guess, a lack of concentration. So some of my big winners can't run kind of thing. And so I'm just worried about how I should try to handle this thought.
Yeah. Do you know, or do you have a sense for which of those two concerns bugs you more?
Yeah, that's a good question. I would probably say, depending on the day, uh, some days the concentration or lack of the concentration bugs me more, particularly when I see a company doing really well, i.e. Costco or Watsco, and I don't own as much of it as I'd like to. Then I get irritated with myself. Then the flip side of that is that I worry about trying to keep track of the companies that I own, listening to earnings calls, analyzing them in any way, shape, or form, maybe doing valuations to determine, okay, is this something maybe I should put more money into because it's still got it's at an attractive valuation now, even though it's maybe run up a little bit. So those are things that I struggle with. And I would say it's about 50-50, honestly.
Yeah, I relate big time with the
Mhm.
whole wishing you had more. And that one
Mhm.
is I don't know if there's a great solution to that. Do you listen to earnings calls for all 26 companies, 27
I do
companies?
not. No, I do not. I do read. I use FinChat to cheat a little bit, and I will read through. I will ask the Copilot or the AI to give me summaries of the companies. So the ones that I maybe air quote not interested in listening to an hour's worth of somebody talk about the company, I will, if I feel like I don't have time, I will ask the AI to give me a summary or a breakdown of the earnings call so I can at least read and okay, everything seems to be doing okay. I don't really need to pay much attention to this right now.
That sounds like a lot of work. 26 companies 4 times a year. I'm
It
not
is.
gonna do the math on that, but that's a lot
Yeah,
of
it is.
that's a lot of
It is. It is. And it can go, and what can feel particularly overwhelming is if you want to try to air quote stay on top of it. Like I tend to be an email inbox zero kind of person. And
Mhm.
so I don't like to have things hanging over my head, so to speak, in that respect. And so let's say that there's a week where you could have half of your portfolio report. And it's like, how do you
Right.
balance working and trying to stay on top of what's happening with the particular companies, which in and of itself is probably kind of dumb to feel that air quote pressure because I'm not most likely either going to sell or buy more immediately, depending on what happens. So if American Express reports and something maybe is positive or negative, I'm not going to react to that news immediately. I'm not going to, hey, I saw that there's an opportunity to buy more American Express, but I got to do it tomorrow. That generally doesn't, I don't operate that way. Whether or not that's the right way to do it, I'm not sure, but that's kind of how I guess, try to think about it.
Why do you feel this pressure to read every earnings call?
Um, I think it's because I feel like I think there's several reasons. Number one, to go back to that whole inbox zero thing, it's my money. I bought the company. I feel like if I'm going to own it, I need to stay on top of it and understand everything that's going on with the company, because otherwise, why am I investing in it if I'm not paying attention to it? Number two, because of what you and I do, I feel like I also need to be informed. And so I feel like I can't intelligently discuss a particular business if I haven't listened to the earnings call in 2 months. And it's like, okay, well then how can I be justified to talk about a company, American Express, to pick on them for a second? How can I talk about American Express intelligently if I don't know what's going on currently?
Well, that sounds like a personal problem, sir. No, I'm just teasing. No, I think this is something that a lot of investors run up against, is this idea that you do want to feel informed because it is your money, and it almost feels irresponsible to not be informed. But is that the right way to think about it?
I don't know. That's why I'm coming to therapy, because I'm trying to figure out if that's the right way to think about it. And I suspect, because sometimes it does keep me up at night,
right,
that I don't think it is the right way to think about it.
So let's talk about your childhood.
Okay.
Let's go back.
Let's go way back. Let's go all the way back.
Where did you get this idea that you should read every earnings call? Do you remember?
I don't.
Do you know any big investors who have recommended that?
No. Not that I can recall, or that I can say off the tip of my tongue that, hey, so and so said this. That may be something I'm inferring from Buffett talking about reading all the time, and Charlie reading all the time. And so maybe in my delusion, I'm kind of taking that advice or suggestion to read everything kind of thing to impose that on myself. Okay, well, if Warren is reading everything about a company, if he buys Moody's or if he buys Apple, he reads everything about them. I have to imagine that he's also reading everything. Once he owns it, he's also reading everything about it to stay on top of it. But I don't know that for a fact.
Right. How many companies are in his portfolio? Let's just basically assumption that he does do that. How many companies are in his portfolio?
I believe, I don't know a hard number, but I want to say it's in the 70 range.
70-ish. Okay.
Yeah.
So 70, and then four earnings reports. So let's say it takes you an hour, 280. How many days of that? If you do a 40, let's say each one of those is an hour long, just to make it simple.
Right.
And then there's 40 hours in a week.
Yep.
So you think 7 weeks out of 52, he's keeping up with his portfolio companies?
Probably not.
Yeah, 7 weeks. How many weeks does he take for vacation? We should call him up and ask. Maybe 4 weeks for vacation.
I don't expect a lot. Maybe, I don't know. Maybe he does take a couple months off a year. I don't know. That's a good question.
It could be 15%. If he was doing 7 weeks to stay on top of it, then 15% of his time is on his current positions. Which I don't know if that's the case or not, but
yeah,
that's still 280 hours a year to stay on top of every position. That's 280 hours that aren't spent finding a new opportunity potentially.
Right.
Okay, so that's all hypothetical and pretty much a waste of time. So let's try thinking of it like from a pros and cons kind of scenario. I think it's kind of imply what you gain from staying informed. But what are some of the potential downsides of being on the pulse of every company you own?
Well, I think probably the initial one would be your emotions getting away from you and overreacting to something that you may see or hear. I think the more, I mean, for me personally, if the more on top of the portfolio or checking the portfolio, I think the more I'm exposing myself to the potential of being emotionally compromised is maybe not the right word, but just emotionally reactive, positively or negatively.
Mm. Yeah, I think that's very insightful. I find myself that way too. I mean, it happened the other day. If you're curious on the stock, you can be a paid subscriber. But there's a bank stock that I've owned, and the earnings have been like out of this world the last 2 years, let's say.
Mhm.
And so the way I felt about that company has been very, very bullish. As I was reviewing this sell that I'm doing, it's like, well, actually, since I bought it, the growth rate isn't crazy. Like, okay, 25% recent growth, but
Mhm.
over call it like a 4-year time period is only 8% a year.
Mm.
So the point of what I'm saying is the recent 25% growth, because you'll see these lumpy growth rates all the time with businesses.
Yep.
That recency made me think like, man, this is one of the best companies in my portfolio. But one of the problems with earnings is it's year over year. You're not looking at 2-year, 3-year, 4-year, 5-year stacks generally.
Right.
And it can totally, I mean, my emotions right there is a perfect example of being like so excited about this company and thinking they're absolutely killing it.
Mhm.
And then being kind of embarrassed and like, oh, actually, a longer viewpoint, bigger picture.
Mhm.
They're doing great, but it's not like world dominating like I originally thought.
Right.
Yeah.
Yeah. Yeah. To that point, if you're reading a lot of quarterly ones, as you said, they're comparing year over year, quarter over quarter. And so if you're not zooming out and looking at a bigger picture, it's real easy to get kind of lost in the enthusiasm. Hey, we're up 14% this quarter, and we don't remember. Oh, I don't remember what they did last quarter or the quarter before. And so it's easy to get, I think, wrapped up in the enthusiasm or the pessimism of what's going on. And if you don't kind of like you were doing, zooming out, you can think, okay, yeah, they're dominating the world, when in reality they had 2 good quarters and the 7 before that were just meh. So yeah, it can really expose you to potential downside risk, not risk, but downside emotions.
If you were to look at your portfolio and let's say you did not stay on top of the pulse, how many of the companies in your portfolio would that make you nervous about? Obviously,
Mm,
we're like completely generalities, but are there any that like jump out like, oh man, if I had to not read the quarterlies for the next 6 quarters, I
right.
would start to get antsy.
Yeah. There's probably maybe 4 or 5 that
Okay.
I would feel like, okay, maybe I don't know the business as well. And so I probably would feel like I need to stay on top of it more. Or one of the thesis or the idea behind why I bought it was that it may be a really small portion of the portfolio, but it could be potentially a bigger portion if I take a bigger bite of it. Like if I stay on top of it, and it could be something that could be a really great benefit, but I'm just not, because I'm not staying on top of it, I kind of miss out on something.
Well, I'll just share in my experience. I've been doing this therapy thing for about 15 minutes and five, 4 to 5 companies out of 26, 27
Mm,
doesn't sound like a huge percentage. And so that probably goes to the type of investor you've chosen to be, the type of companies you've chosen to invest in.
mhm.
I would I would guess that that's a pretty low percentage relatively compared to
Yeah.
maybe other investors.
Yeah. Yeah. I would probably agree with that. I mean, generally, I've bought safer businesses, and I haven't really gone down to the path of. There's been a few, but for the most part, they have been businesses I either understand to a pretty good extent, or they're companies that are longer in a tooth is not the right word for it, but are more on the mature side
Yeah.
than not.
So we've kind of looked at the two extremes. You could stick your head in the sand. You could
Mhm.
You could scour the internet for daily news and on the hour updates of what this analyst and that analyst thinks. What's the middle ground? Is there a way you can give yourself the assurance that things are going according to plan without having, I mean, every company is different. That's going to be my new tagline. But if only, you know, realistically 4 to 5, you're going to still stay on top of for the vast majority of your portfolio, are there things that you could add to your process where you're not saying, I'm not going to dive deep into this, but if I see this, I'm going to continue and just not feel like I need a deep dive here.
Right. Yeah, for sure. I think one of the things that I probably would be better served would be to come up with a way of, I guess, ranking the companies by order of necessary to stay on top of. Berkshire Hathaway, I read those because they don't do an earnings call, Berkshire, but they do release a 10Q. I mean, reading those, I still want to read those, but those maybe are not as burning to read. And so I think if I kind of did a reverse ranking of like, okay, these are the ones I need to stay on top of. These I probably want to stay on top of. These I can get to later, kind of thing. And I think if I did that and tried to organize them by when they're going to be air quote released, then it would probably help alleviate some of that feeling of pressure, like, hey, I need to stay on top of this one, where this one, yeah, I want to read it, but if I don't get to it this week, it's okay. And these 3 or 4, I'll wait till earnings season is over, and then I can look at those. Unless something pops up on the radar, i.e. social media or some news channel, like, hey, you know, Visa decided to start selling pizzas instead of doing what they do. Okay, well, I need to probably move that to the top of the list, kind of thing. What are your thoughts on that as a way of kind of changing the process and help maybe alleviate some of the pressure?
Yeah, I love that. I think any process that can help that fits for you will be very beneficial. I mean, I'll admit to you, I don't read every quarterly. I might deep dive on a company once every couple of years that's in my portfolio, unless something shows up on the number or something. But as far as the reading goes, I'm certainly more on the lax side of keeping up on that. So I would not look any differently at you if you decided to scale that way back. And yeah, because I don't think it's necessary. Again, I could be wrong about it, but I like having a system where I'm enough aware, almost like a pilot, kind of checking the gauges, but I'm not reading the manual every time.
Right.
That's
you're not calculating how much fuel you're burning as you cross the mountain versus crossing the ocean. Like, okay, we got enough gas. We're going to get where we need to go.
Well, it depends if you're talking about a spreadsheet with many tabs. Then maybe
then I know you're
if you're talking about a financial report, yeah.
You're right.
What else is on your mind, sir?
I guess the other thing is there are a few companies that I have been kind of butting my head against about whether I should do more work on them, i.e. try to learn why I should either reject them or consider adding them, which is kind of dichotomous to what we were just talking about. But the 3 are MasterCard, FICO, and Meta. And there's differing reasons of why they have been stuck in my mind. MasterCard, mostly because it's kind of the twin brother to the Visa. And I've seen what kind of returns it's had compared to Visa's, and they're pretty close. And I just go back to my decision to buy Visa and not MasterCard, and not to just buy them both at the same time, and wonder, why did I not do that? And was that a potential mistake? And is that something I should maybe consider rectifying? FICO is, I think, based on what I've learned about the business, arguably one of the bigger moat kinds of businesses out there. And it's uber expensive by any way you try to look at it, whether it's metrics or more traditional DCF, reverse DCF. There's just no way. There's nobody in the world that doesn't think it's expensive. Probably even the company itself is like, it's stupid expensive, but it stays on my radar because of the quality of what I think the business is. So that's maybe less pressing, but it's still something I'm like, okay. And I guess the other part of that is it's definitely in the financial sector, and I have a very strong tendency, bias, if you will, towards financials. And so I have a fair amount of them in my portfolio already. And do I really need to add another one? So there's that. And then the last one is Meta. And that one is more about, I feel like maybe I misjudged Zuckerberg. And so I just wonder if, okay, did I A, misjudge him, and B, should I take a look at them and see if that would be something that might fit what I want to do?
Which one of those three is most on your mind lately?
MasterCard.
MasterCard. Okay, cool.
Yeah.
What is it about MasterCard in particular?
I think it stems from probably my recent travels. So I was lucky enough to go to Brazil recently, and I saw MasterCard cards everywhere, on the beaches, in the hotels, at the restaurants, at the grocery stores, and Ubers. I mean, everywhere. And I just started to wonder, okay, this is obviously a thriving business, and it's arguably one of the bigger moat businesses in the world. Why do I own this?
Yeah, that's a tough question. How come you didn't buy it before?
Because I think probably stupidly, I think, well, I remember why. Stupidly, I thought that Visa, because it was more America centric versus global centric, would be the better bet of the two. And in part, I think that was because that was kind of during the pandemic and afterwards, and it felt like everything was so up in the air, and I felt like the global economies were going to take longer to rebound from everything than the US economy. And in some respects that was probably true, but the bigger growth area, you could argue, is globally than US centric. And so that's kind of why I'm hesitant. That's why I've been vacillating.
So it's outperformed your Visa position since you bought Visa?
Yes.
I'm noticing a pattern, at least with the Meta and the Visa thing. Both seem to stem from what you are, at least from what you're telling me, that you are perceiving as your own mistakes.
Yes.
Do you think that's why you're thinking about it more than, because there's thousands of companies that you and I both have missed on,
Right.
but for particular reasons, Meta and MasterCard are really
Yes, because I don't like making mistakes, and when I make a mistake, when I feel like I make a mistake like that, it sticks with me. So yeah, to your point, yeah, I sucked my thumb on Amazon. I've never bought it, but that one doesn't seem to stick in my craw like MasterCard does.
Right. And what's keeping you from buying it now?
The aforementioned therapy session of having too many companies in my portfolio, also having a large exposure to financials. Do I really want to add, like, I feel like you either need to subtract something or add something. And do I really want to add another financial to what I already own?
Well, what's your percentage of financials now?
I don't have, yeah, that's a good question. I guess I don't know the exact number, so I probably should figure that out before I make broad judgments that, you know, hey, I own too many financials.
Okay, let's move on. Going to Meta, what's keeping you from buying that now today?
Well, I don't really know the company, truthfully. Like I've obviously looked at the financials, I've looked at the numbers, I've listened to a few earnings calls, but I wouldn't say that I have a 100% grasp on how they make money and where I think that's going to go. If I think about the different business lines that they have, so if I think about something like the Facebook part of the business, I unknowingly feel like they're probably more towards the end than the beginning of growth for that. Instagram feels like maybe it's middle innings, if you will. And the WhatsApp thing feels like that's very early innings. And that doesn't even include any of the AI business that they could potentially be a big winner in, or one of the bigger winners in. And I don't know that I have any particular insights into any of those. That feels a little bit outside of my circle, but it also feels like something I would probably enjoy learning about. And so that's kind of where I am.
And what's stopping you? Like, what would you lose out by going to do that research?
You know, missing out on something better. I mean, logically, nothing. Logically, it would make sense for me to try to spend a little time trying to learn some of those things.
Yeah.
And they could be benefit, even if I don't end up deciding to buy the company, or I don't like the valuation, or I decide that I was right about Zuckerberg all along, then it's not time wasted. I just haven't pulled the trigger because I'm not sure why.
But why Meta versus, let's say, 100 other businesses in the S&P?
Probably because the value investor in me is anchoring on the fact that it went from this price to a really low price and then back up to a high price. And I didn't think about trying to understand it when it was a really low price. And I feel like I missed out.
Okay. Yeah, that's fair.
But how would you, like you mentioned a while back about buying Markel and not sucking, I was stopped sucking my thumb on Markel. So
Right.
how would you, how did you get past the sucking thumb part?
That one's less company specific and more
Mm.
about coming to a realization that having a strict dividends dogma might be doing me a disservice.
Mm.
Coming to that realization, seeing Markel and knowing that it's probably a top 5, top 10 capital allocator at the helm, in my
Mm.
opinion, leading me to saying, okay, it's at a good valuation now.
Mm.
And the only thing that really had me ignore them was the dogma.
Mm.
So
Yeah.
another unhelpful answer for you.
Well, there's, the thing about therapy and the thing about stocks is there's no easy answers, I think. And what may work for one thing may not work for another thing. And it's all part of the learning process, figuring out how we can get past our biases to try to get out of our way and do the things that we know can work. And I mean, that's part of what makes it hard. It's also part of what makes it fun.
Yeah. So what do you recommend for people out there who have similar issues? Maybe they're grappling with the number of positions in their portfolio, for example.
I think the realization that you kind of enlightened me on, like how many of those companies really do you feel like deserve your constant attention? And then try to focus on those as opposed to looking at the overall number. If you own 15 companies or if you own 30 companies, I think that's probably a good way. I really like that. And I think that's a really good way to think about how you're trying to manage your time, because we all have limited amounts of time. And most of us can't do what Uncle Warren does and read 12 hours a day. So because we don't have that time, then we have to allocate it as, I guess, judiciously as we can. And I think ranking them like you were suggesting, I think is a really good way to try to do that. And that's how that's how I'm going to do it.
Well, actually hearing you say that makes me think that you could apply that same mental model to the flip side, the whole Meta MasterCard. You're wondering, do I spend time on this stock versus that stock versus the 100 other fish in the sea?
Mm-hmm.
You could potentially rank those and
Yeah.
then just start going down the list. And
Yeah.
at least you'll know you did something to try to make sure. You won't find perfect efficiency, obviously, in stock picking, but maybe you've at least done the work rather than wondering, oh, was this just like a big waste of time? And
Right.
now I missed out on the stock that was just the Meta of 2025.
Right.
Yeah.
Yes. Yeah, for sure. That's a brilliant point. And I think the other thing too is we have no idea whether we may start digging into a company and go, yeah, no,
Right.
it may be shiny because it's something we don't know. But once we start maybe digging under the covers a little bit, we're like, yeah, no, not so much. I'm gonna pass. And then that's good, because then you can just cross that one off. And I don't know if you're a list person. I like to cross things off. I am. And so if you can do that, then that's just one less thing you got to worry about. And that's a nice place to be.
I have many
Yep.
of these on my desk.
Oh yeah, me too.
This one makes me happy because it's almost everything's crossed off except
Yeah,
for that
right.
bottom row. So
Yeah, yeah.
good
Those
time.
are the good days.
Yeah, exactly.
So yeah, I like that idea. I think both of those kind of the flip side of each other. I think is a great way to manage these thoughts.
Do you feel like you learned something at all? Do you feel like this was helpful in any way?
Yes, I do absolutely. Yes, it was very helpful.
What was the most helpful part of doing all of it?
I think two things. Number one, being forced to talk about it and putting it out in the air, it makes you think about why are you feeling the way you are. And I think sometimes even if you maybe don't solve the problem, at least putting it out there and having somebody else listen to it and not laugh in your face can be very helpful, I think, to me anyway, to feel like, okay, I'm at least taking a step in the right direction.
Right.
Yeah.
So you're actually heading something up related to this for Value Spotlight members, right?
Yes.
You want to talk about it?
Sure. Part of what we're offering with the Value Spotlight community is basically a therapy session. We're going to call it stock therapy, and it'll be very similar to what Andrew and I just did today, but I will be leading it, but doesn't mean I will always be the leader. Other members can obviously partake and offer their opinions and whatnot. And it's going to be a place where you can come together without any judgment and talk about what you're feeling or what your thoughts are, what your struggles are, and what your triumphs are in investing, because it's not an easy game. And it's especially hard if you're doing it alone and you have all these questions. Maybe you're listening to me and going, what an idiot, which is fair. But there's going to be times where you're going to have things that you just really need to get off your chest and talk about your thoughts and your feelings, because like it or not, investing is part emotion and is part numbers, and we have to master both. And so this could be helpful to people moving past that, or at least getting better at it.
And you give me portfolio therapy once a week and have
Yeah.
been since like 2020. And that's been so huge for me and my portfolio. And you talked me off the ledge actually this week on something that I've had a lot of conviction on and was really doubting. And so it is super, super helpful getting that outside perspective, because it's so easy to get caught in your
myopic little
the little windshield. So that's going to be a weekly workshop. When's it start?
It's going to start in April. We haven't decided on a specific date yet, but that will be announced very shortly. But yeah, it's going to start in April.
Awesome. Any final words?
Go out there. You could do this. Don't be afraid, and come talk to me in Value Spotlight. I'm here to help.
Sweet. Well, that's going to wrap us up. You guys go out there, invest with a margin of safety, emphasis on the safety. Peace.